Good morning, everyone, and welcome to this morning's meeting. I'd like to call the meeting to order. The time is now 9:05. And Stephanie, would you please take attendance?
Yes, thank you. Good morning, everyone. Adrian Cochran will not be joining us this morning. Andrea Comer has not joined us. Ellen McKitterick,
Present.
good morning. Mike Stoltis has not joined us. Holly Williams
Present.
and Melissa Gibran.
Present.
Thank you. We do not have a quorum.
Thank you, Stephanie. And I'd like to thank all of the members of the public for joining us this morning. We're going to table number 2 on our agenda, which is approval of the December 19th meeting minutes. And we will move on to item number 3, which is a review of spending to date. Dave, can you give us an update?
Yes, good morning. Thank you, Holly. Okay, we are going to go over the results for December 2025.
You can see your screen, Dave.
Thank you for the verification, Stephanie. Okay, so we'll get right into it. For the month of December 2025, our operating results were just over negative $959,000. That resulted in a positive $234,000 plus variance for the month of December. Spending for the month of December was the usual, nothing atypical. Payroll and related expenses was $676,000. The contact center was $136,000. Outreach was $90,000, and software licenses was $21,000. So nothing out of the ordinary there. Year to date, our results are, including the redesignation transfer, are negative $12.6 million with over a $1.5 million variance. No real significant negative variances on any of the line items. The largest one is fund recovery penalties. We've gotten not quite $300,000 year to date, but we are seeing a negative variance of $52,000 compared to what we budgeted. But most of the other expenses have positive variance, which is leading to the over $1.5 million variance I mentioned previously. Talking about our bond expenditures for the month of December, they were just over $33,000. That was just under $8,600 of a positive variance. And we are still spending money on website redesign and the like. Matt, our king of IT, went over that at the board meeting last month on the type of things that IT is doing. And so we do use some bond money to support expenditures for systems and the like. Year to date, that spending is $306,000, a negative variance of $53,000 year to date. But we expect that amount to slowly go down through the end of the fiscal year. But we'll still have enough bond money at the end of the fiscal year to continue working on the stuff IT is working on. And that amount currently is $1.1 million of funds available for various systems and system improvements. Moving on to our contribution account activity. Our activity for the month was negative, just over negative $37 million. That resulted in a $1,036,000 negative variance for the month. The main driver was benefits paid for the month. There was a negative variance of $1.6 million. Our spending for benefits for the month was just under $38 million. That equates to a spend rate of $9.5 million a week. That is a decrease from November, which was at $9.9 million. So typically around this time of year, we see a seasonality decrease, and we are seeing it this year again. Moving on to contributions for the month, they were over $822,000. That was a $490,000 positive variance towards budget. The fund recovery numbers were slightly under at $53,000. And our investment income for the month was at $1.9 million, which was pretty close to budget. Our rate we're earning right now is at 3.9%. We had budgeted at a rate of about 4.1%. So that's why we're pretty close to budget. Not sure what's going to happen with the Fed fund rate in the future, but if it does go down, we may start seeing more of a negative variance with investment income. But we do have over $1 million positive variance year to date right now. So we don't expect an annual negative variance for investment income. Year to date, in totality, our activity is almost a negative $11.7 million. That is a negative 21 point, almost a negative $21.4 million negative variance compared to budget. That is because of two things. Number one, there's a benefit variance of almost $16.5 million, being higher than what we budgeted. And the contribution revenue also has a negative variance year to date of almost $6.5 million. The contribution fund itself is at over $574.1 million. That is about $8 million higher than this same time last year. So the fund continues to be in a decent position. Taking a quick look at our balance sheet, our total assets are $579.7 million. And the largest asset does continue to be the short-term investment fund account at $556 million. Other assets are our bond funds of $1.1 million, like we indicated earlier, and our operating funds, we are currently at just over $2.1 million. Still have $17 million of an impressed account at Aflac to pay benefits. Fixed assets holding steady at $2.2 million, and our liabilities are also holding steady at $11.2 million until we make the next bond fund repayment in June. Looking ahead to the end of the fiscal year, our projection hasn't really changed much since the last time we spoke. Our activity, including the redesignation transfer, is expected to be at negative $12.7 million, and that's a $1.6 million positive variance. And the two biggest drivers of that continue to be payroll and related expenses. We have positions being filled later than anticipated. We had some open positions that weren't budgeted for that are being filled, and the overhead rate for pensions is lower than budgeted, so that will be a positive variance for the rest of the fiscal year. Our spending for IT consultant services is also lower than what we budgeted for, and that's another major driver of the positive variance. For the contribution projection, we have adjusted our contribution estimate for the rest of the year, and we have lowered it to come in at what we budgeted for contribution revenue. Uh, and that is because we are seeing some economic headwinds come our way. Uh, Number one, as we've mentioned before, the contributions that have come in for the past couple of quarters have increased quarter year over year, but not as much as they had in prior years. Also, according to the latest Connecticut economic update, the labor market is cooling. There's slower job growth. There's a declining labor force. There's also a declining labor force participation rate, and those two factors uh, factor in appropriately enough to the unemployment rate. The unemployment rate is still pretty low. It's at 3.8%, and that's actually lower than the federal unemployment rate, but it's still higher than it was same time last year for the state of Connecticut. So we are seeing some of those headwinds come our way. Now, uh, there's nothing alarmist to be about. Like I said, the unemployment rate is still low. The minimum wage increased as of January. Uh, Layoffs have appeared limited for the most part, notwithstanding this morning's announcement that Macy's is laying off 1,000 people. Uh, but that is uh, uh, the economic um, and labor background that we're seeing in Connecticut right now. So, for those reasons, we have lowered our contribution revenue estimate. Now, our contributions for the latest quarter will be due and coming in next week. Once we get that information and analyze it in partnership with our actuaries at Spring, we'll take a close look at the data, and if any further adjustments to this estimate are warranted, we'll make them and discuss them at the next board meeting. Uh, so all in all, that's why we lowered it. All the other estimates here are pretty much the same as last time, and all that means that we expect a net activity of 5.9, almost $5.9 million, which is a $6.3 million negative to budget, but it's still positive for the year to date. So we do expect that kind of increase to the fund by the end of the fiscal year. So that's where we expect to be at fiscal year end and where we are now as of December. I'm happy to take any questions from anybody at this time. Yes, Melissa.
Good morning. Thank you. I just want to go back. You had a slide which showed revenue growth. I think it was month over month was up over 800,000, but the year end was down. Did I hear that correctly? Was that?
Yeah, for the month we did have a positive variance, but year to date it was negative. Yes.
And why do you think what is so unique about the month tally of that additional? Do you think, can you point to a specific reason why?
No, I think it might be some timing because some employees don't wait until the end of the quarter to pay. They pay during the month. So
Okay.
I think we just had more employees pay monthly than we had budgeted for. Uh, that amount also does include um, a reduction for contribution revenue for refunds that we pay for people who overpaid, for employers,
Okay.
private plans, which we've discussed before, which we did pay during the month of December. I don't know if you remember, we did we had a discussion and analysis on that.
Yep.
So it does include that, and it was still higher. But 1 month does not a trend make.
Right.
And our contributions for the month were less than $1 million. So when the contributions come in for January, they're going to be closer to 95 to $100 million. So that's, so comparing December to January, obviously there's a big difference. So We'll talk next month, see what the latest contributions are for the latest quarter and see if they're positive or negative compared to budget. And like I said, we'll adjust the projection at that time.
Great. Thank you. It's very helpful. Appreciate it.
You're welcome. Anything else?
I don't see anything. Thank you, Dave. And I'm just confirming, don't see that anybody else has joined, so we still don't have a quorum, so we will table our minutes, our vote on our minutes until our next meeting next month. So now, is there any old business? No. Any new business? Not seeing any. All right, well, may I have a motion to adjourn?
We actually won't be able to do that, so you'll just have to
Oh,
end the
yes.
meeting. End the meeting by administrative fiat.
Well, that's kind of anticlimactic. Okay, well, have a lovely weekend. I'm still going to say the meeting's ending. It's 9:21. I hope everybody has fun sledding, and we will see everybody next month.
Sounds good. Thank you, everyone.
All right.
All right.
Thank you.
Weekend.
Bye.